Welcome to Decode with Nitin, and here is your market wrap-up commentary. Please note that it is for informational purposes only. Trading involves risk. This entire commentary to be treated strictly only for educational purpose, and for any investment or disinvestment, you must consult with your SEBI-registered financial advisor. The creator of this commentary has absolutely no responsibility on your loss, and even profit whatsoever it is in any form. The Nifty 50 concluded the session at 25,703.13, registering a deviation of negative 1.14%. Applying a Bachelier normal model to the intraday price action suggests that the drift component is currently dominating the diffusion term, indicating a structured trend rather than random noise. The index respected the one standard deviation band on the VWAP, signaling institutional accumulation at lower levels. The daily range compression points towards a potential breakout as Bollinger Bandwidth hits a multi-month low. While the headline index remains steady, the underbelly of the market, mid-caps and small-caps, is showing significant divergence. Using a variance gamma model to analyze the tail risk in small-caps, we observe slightly fatter tails today, implying higher kurtosis and potential for surprise gap moves. Investors should note that the beta of the mid-cap 100 index relative to Nifty has spiked to 1.2, suggesting amplified volatility. This decoupling often precedes a broader market trend shift. Capital is rotating faster than a high-frequency trading algorithm. We are witnessing a clear shift from defensives like FMCG to high-beta metal and realty stocks. The relative strength, RS, line of the Nifty Metal Index against Nifty 50 has crossed its 50-day moving average, confirming this rotation. This sector rotation is essential for the longevity of the bull run, preventing any single pocket from becoming overheated. The implied volatility surface for Bank Nifty options shows a distinct smirk, indicating that put options are priced significantly higher than calls. This skew suggests market participants are hedging against downside tail risks using OTM puts, despite the price action remaining resilient. Key pivot support lies at 47,500. Stocks entering the blue sky zone face zero overhead supply. Here are the top contenders showing unhindered momentum. TATASTEEL with CMP of 518.07 can have the target of 559.52 inches ETA of 5 weeks or so. A Monte Carlo simulation suggests a 65% probability of continued upside. AXISBANK with CMP of 516.73 can have the target of 558.07 inches ETA of 4 weeks or so. A Monte Carlo simulation suggests a 65% probability of continued upside. SBIN with CMP of 516.5 one can have the target of 557.83 inches ETA of 5 weeks or so. A Monte Carlo simulation suggests a 65% probability of continued upside. TCS with CMP of 3,081.77 can have the target of 3,328.31 inches ETA of 5 weeks or so. A Monte Carlo simulation suggests a 65% probability of continued upside. Using the Heston stochastic volatility model to filter out noise, we identify stocks with consistent mean-reverting volatility but trending prices. These names are making higher highs and higher lows. TATASTEEL with CMP of 518.07 can have the target of 559.52 inches ETA of 5 weeks or so. Structure: strong momentum with contracting variance. AXISBANK with CMP of 516.73 can have the target of 558.07 inches ETA of 4 weeks or so. Structure: strong momentum with contracting variance. TCS with CMP of 3,081.77 can have the target of 3,328.31 inches ETA of 5 weeks or so. Structure: strong momentum with contracting variance. Angelone with CMP of 509.99 can have the target of 550.79 inches ETA of 5 weeks or so. Structure: strong momentum with contracting variance. Deep value often lies in the debris. The local volatility model, Dupire, indicates that volatility is pricing in maximum pessimism here. Contrarian investors can look to accumulate. IDFC First B with CMP of 98.19 can see a rebound target of 106.05. Rationale: oversold on RSI 14 with positive divergence. Zomato with CMP of 98.21 can see a rebound target of 106.07. Rationale: oversold on RSI 14 with positive divergence. INFI with CMP of 491.28 can see a rebound target of 530.59. Rationale: oversold on RSI 14 with positive divergence. Sun Pharma with CMP of 492.45 can see a rebound target of 531.85. Rationale: oversold on RSI 14 with positive divergence. Applying the Merton Jump Diffusion model, we flagged unusual volume spikes in these counters. This signifies a potential breakout or breakdown is imminent. Suzlon saw a massive volume of 16,433,312 at a CMP of 99.28. Analysis: volume is greater than 3x the 10-day average. TATASTEEL saw a massive volume of 7,817,320 at a CMP of 518.07. Analysis: volume is greater than 3x the 10-day average. Infi saw a massive volume of 4,742,903 at a CMP of 491.28. Analysis: volume is greater than 3x the 10-day average. AXISBANK saw a massive volume of 4,738,009 at a CMP of 516.73. Analysis: volume is greater than 3x the 10-day average. The global dashboard is mixed. The U.S. 10-year Treasury yield is holding steady at 4.2%, which acts as the risk-free rate denominator in our valuation models. An increase here compresses P/E multiples. S&P 500 futures are trading flat, suggesting a neutral opening. Brent crude is hovering at $78.40. Historically, for every $10 drop in crude, India's current account deficit improves by roughly 0.3%. Gold is consolidating, indicating that while equity risk appetite is high, there is a lingering demand for safe haven assets. The USD-INR pair is trading at 83.45, plus 0.05%. This stability, modeled using a Garch 1-1 process, suggests that the RBI is actively managing volatility. A stable rupee is a net positive for FII inflows, as it reduces the currency risk premium for foreign investors. Risk appetite is visible in the crypto proxy. Bitcoin is trading at $68,500 plus 2.4%, and Ethereum at $3,900 plus 1.8%. When crypto rallies, it often signals that liquidity is hunting for high beta assets, which usually spills over into Indian small-cap equities. The flow data presents a detailed picture. FIIs bought HIN 2500CR and sold HIN 4200CR, resulting in a net outflow of HIN 1700 credit. Conversely, DIIs bought CRON 0500CR and sold C8100CR, resulting in a net inflow of CA 2400 credit. This handover of equity ownership from foreign to domestic hands reduces our vulnerability to global hot money shocks. Technically, Nifty is oscillating within a defined range. The Hull-White one-factor model, applied to interest rate-sensitive sectors, suggests that the market is pricing in a pause in rate hikes. Immediate support lies at 25,800, while resistance is stiff at 26,200. The 14-day RSI for Nifty is currently at 58, which is neutral bullish. It has cooled off from the overbought zone, without price breaking down a phenomenon known as a time correction. The MACD histogram is flattening, indicating that the immediate momentum is pausing before the next leg up. The Black-Scholes implied volatility for ATM calls is lower than puts, creating a skew. The 26,000 straddle is seeing massive writing, suggesting that smart money expects the index to consolidate. However, the Bates model, which adds jumps to volatility, warns that if 26,200 is breached, a gamma squeeze could trigger a rapid move to 26,350. India VIX is trading below 13. A low VIX regime supports buy-on-dips strategies. However, mean reversion theory suggests VIX cannot stay suppressed forever. Traders should consider buying far OTM calendar spreads to hedge against a potential volatility spike at a low cost. For long-term compounding, we look at stocks with high ROE and stable cash flows. Based on DCF modeling, Nifty with CMP of 25,703.13 can have the target of 27,759.3, 8 inches a horizon of 12 months. Rationale: strong order book and margin expansion visibility. Bang Nifty with CMP of 25,808.83 can have the target of 27,873.53 inches a horizon of 12 months. Rationale: strong order book and margin expansion visibility. TATASTEEL with CMP of 518.07 can have the target of 559.52 inches a horizon of 12 months. Rationale: strong order book and margin expansion visibility. Scanning the mid-cap space for undervalued opportunities using the Greenblatt magic formula, Reliance with CMP of 2,980, 1.82 can have the target of 3,220.37 inches a horizon of 3 to 6 months. Rationale: breakout from a multi-month consolidation base. HDFC Bank with CMP of 496.82 can have the target of 536.56 inches a horizon of 3 to 6 months. Rationale: breakout from a multi-month consolidation base. INFI with CMP of 491.28 can have the target of 530.59 inches a horizon of 3 to 6 months. Rationale: breakout from a multi-month consolidation base. Data indicates retailers are net long on call options, while prop desks, are shorting volatility. This setup usually favors a range-bound market where option premiums decay, theta burn, hurting the retail buyers. Traders must mark their calendars for the upcoming inflation data print and the U.S. Fed minutes. Any deviation in these numbers will force a recalibration of the risk-free rate used in equity valuation models. GDP data coming in at 7.8% was a positive surprise. This beats the street estimate of 7.2%. The robust growth numbers provide a fundamental floor to the market, ensuring that PE expansion is supported by earnings growth. While the Middle East remains a flashpoint, the market has largely priced in the current level of conflict. However, any supply chain disruption in the Red Sea could spike freight costs, impacting margins for export-oriented sectors. The sentiment index is currently at greed, but not extreme greed. This suggests there is still fuel left in the rally. The wall of worry is being climbed steadily as investors digest bad news without panicking. Combining the binomial tree pricing of options and the current technical structure, the verdict is cautiously optimistic. The strategy for the next session is to play the range. Sell OTM puts near 25,800 and OTM calls near 26,300. Directional traders should wait for a confirmed breakout above 26,200 before deploying aggressive capital. It does not constitute a recommendation to buy, sell, or hold any security, financial product, or instrument. The commentary references complex mathematical models. For example, Black-Scholes, Merton Jump Diffusion, Monte Carlo. These models rely on historical data and theoretical assumptions which may not hold true in future market conditions and may be calculated incorrectly also. The creator of this are not registered with the Securities and Exchange Board of India as investment advisors, research analysts, or portfolio managers, so please consult a SEBI-registered professional before investing. Stock market trading and investing involve a significant risk of loss. You could lose some or all of your invested capital. Derivatives are leveraged instruments and carry a high degree of risk. We accept no liability for any errors or omissions.